Alright, welcome MegaWhale team to the channel, and welcome to all the new viewers tuning in today. We've got a really interesting video today, and I'm going to be sharing with you guys a lot of information I've learned over the last 6 years being a full-time trader, close to 7 years, and even longer keeping up to date with the markets and understand how the global financial markets actually work. So, obviously in these 6 years I've been very profitable. I've managed to turn my small investment into quite a large sum of money. I've also been able to being grateful enough and humble enough to be able to help a lot of other people do exactly the same thing and change a lot of lives in the process. So today I'm going to give you 5 tips. They might seem basic, but these 5 tips, if followed correctly, can take you from being an okay trader to taking you to the next level. We're going to do a more in detailed video based around technical analysis, top 5 technical analysis tips later, but today is top 5 tips and actions you can implement immediately into your trading strategies or into your mindset around financial markets to help you become a more profitable trader. So remember guys, feel free to like, comment and subscribe. We just broke 1,000 subscribers, which is awesome. We're going to do another giveaway at 2,500. We'll get straight into the video. So point number 1 is going to be identify the long-term trend. It is really important that when you're charting a chart, you identify the long-term trend, whether we're in an uptrend, whether we're in a downtrend. The reason being is because if we are trading in a downtrend, until we break out of that downtrend, we have to assume that the price will continue lower. And every single move up is just a bounce or a relief rally, all right? People get caught up in buying bottoms or caught up in the FOMO when we start seeing green candles. The reality of the situation is until we break critical structures on charts, critical resistances and flip those as support or critical long-term diagonal resistances from market structures, the chart can remain in a downtrend and continue downwards even if the indicators are indicating a reversal. So identifying the long-term trend and trading based on that trend, or at least being aware of that trend when making shorter scalps or making long-term investment decisions will benefit you greatly in the long run. If we take a look at Bitcoin, there's many instances over here, and if you've been on Twitter and you've been keeping up to date, people were very bullish here, people were very bullish here, people were very bullish here, and yet again, people were very bullish here. Every single time we have a bit of support and we have green candles, people tend to get bullish. The reason being, and the reason why these people always end up losing is because they don't look at the bigger picture. You gotta zoom out. I like to say, when in doubt, zoom out. Number 2, probably one that I advocate the most, guys, and that is risk management. Now, we did a video on risk management. Here we are, learn to trade risk management. I highly recommend you go watch that video. It's going to contain all the details you need to know to understand how much money you should be investing per trade, how to set your stop losses, how to set your take profits, all the good stuff. But guys, risk management is what differentiates a good trader, should I say a successful, profitable trader, over a trader that just loses money, all right? Anyone can get lucky in a market and make some money over a few weeks or a few months, but if they do not have a set strategy or they do not know how to manage their risk, eventually the tower comes crumbling down. I've heard many stories of people turning small amounts into 6 figures, 7 figures, even 8 figures, and only going on to lose all that money in a very short period of time, guys. Managing risk means that you are making more money on your wins than you are on your losses, and you're able to replicate that consistently over a period of time. So number 3 is don't buy just because the price is low. And we can look back on that Bitcoin chart to explain this. Just because the price is low, it doesn't mean you should buy. The price can continue downwards as long as it is in a downtrend for a period of time, and most of the time it will continue further down than you actually anticipate. It's very hard to buy a falling knife, it's very hard to catch a falling knife, and it's very hard to predict the bottom, because in reality the bottom is only the bottom in hindsight. So every time you try catch or buy that dip based on the price being low, you're taking a huge risk. Always buy based on analysis, always buy based on data that you have actually uncovered, and make sure you have a strategy and game plan in case anything goes wrong and you know how to exit your position accordingly. Number 4 is a big one, guys. That is going to be drop emotions, lower your expectations, and stop following Twitter influencers. I'm going to break it down. So first and foremost, we're going to drop emotions. Emotions are not here to help you when trading. Simple as that. Emotions are your enemy. The human mind does not like risk. Whenever we see risk, we run in danger. Generally, we do the opposite. And that is why I always like to say the majority is always wrong and the biased are always late. All right. So drop your emotions. And the way you can do this is before you enter a trade, make sure you got your risk management strategy done or calculated. Have a exit strategy. So look at worst case scenario. What could happen if this trade goes south and how should I respond? Then look at your exit targets. Make sure you know when you're going to sell and set your orders and sell. Even if the price goes higher, it doesn't matter. You made profit, move on to the next trade. All right, drop your emotions. Number 2, lower your expectations. A lot of people have come to cryptocurrency because they heard stories of people making $1 million on Dogecoin, or they saw it go viral, or all these different crazy things. And a lot of people think they can come to crypto, invest a small amount of money and have $1 million overnight. The reality is very, very, very small percentage of people are able to do that. For most people, it is a grind. It is a slow grind and it's a very difficult grind. 97% of people lose money within a few months or lose all their money within a few months of trading cryptocurrency and most other risk assets. It is incredibly difficult. It takes a lot of patience and a lot of knowledge and a lot of risk management to be profitable in this space. So your expectation should be not, I want to make $1 million, but you should calculate a percentage of your total investment and decide to try, aim to make that amount every single month, every single year, whether it's you want to make 20% a year or you want to make 100% a year and double your money every year, whatever that target is, have a realistic and accountable target that you can measure and you can attain. And finally, stop following these freaking Twitter influencers, guys. They are not here to help you. They are spilling bullshit. They don't help you guys. I've had so many people come to me and join my VIP or even just message me in general saying, I followed this bit of advice from this follower, this Twitter follower, Twitter influencer, and now I'm down like 40% of my investment. What do I do? And guys, these people are not here to help you. They're here to promote projects. They're here to promote coins. They get paid to do so. They are influencers, not traders. There are a few people on Twitter that I do recommend you follow. Follow people who are actual traders who have experience in this space. I gain absolutely nothing talking to you guys. I gain absolutely nothing doing these videos. I'm doing these videos to help you guys. There's no financial benefit me doing this. I don't even get paid by YouTube to do these videos to you guys. This is all purely to help you guys become better traders and to help you guys go through this space more advised and less, in the dark. And my final tip, guys, is remember to always take profit. You should always be scaling in and scaling out of trades. So whenever you get a chance to take profit, even if you take a small bit of profit, take that profit, move your stop loss up to ensure you're always profitable. And guys, that is it for me today. We're going to do a few more of these. We're going to do top 5 mistakes to avoid. We're going to do top 5 technical analysis tips. And we'll probably do a few other top 5s. I'm really liking this top 5 series. So if you've got any questions, guys, leave them down below. I hope this helped you guys a little bit. I want to keep these videos less than 10 minutes. So it's a lot of information to put into 10 minutes. But we are going to expand on each of these individual topics in a separate video in more detail in the future. So stay tuned. Remember, guys, if you liked the video, hit the subscribe button and we'll catch you in the next one.